AMD just reported and they crushed revenue, up 70% year over year. They were expected to bring in $6.5 billion in revenue and $1.04 in earnings. This is their actual per share. This is their actual press release. They did $6.55 billion in revenue versus $6.5, and the earnings per share though was 27 cents versus an estimated $1.04. Now, this makes me feel better about the Intel thing. However, the revenue was still huge, up 70%. Gross margin down slightly, just like Intel had. Operating expenses up big time, just like Intel had. So there's a lot of things here that are great. This is the 8th quarter in a row for Intel. I think they actually mentioned it right here. Yeah, 8th straight quarter of record revenue based on our strong execution, expanded product portfolio. Right now, after hours, AMD, after crushing, is down 5%. At one point, it was down 8%. And by the way, by the time this video posts, it could be positive. I have no idea. So AMD is crushed. We did Intel videos. I've been a proponent of Intel. Everybody's like, Paul, you missed it on Intel. Maybe so. But my argument back is, if you think AMD is the better chip, which in all likelihood it is, okay, then why aren't they up $200 a share? And if you like it better than Intel, pay $1,000 a share for it. You might sit there and say, that's ridiculous. I think $95 is ridiculous. Let's look at our 8 pillars. Now, keep in mind, the 8 pillars here do not factor in the new results because it takes a few days for our data feed to promote this, to fill in this information. Big concerns. Big shares outstanding increase. They're diluting their owners. Now, granted, if they keep the 70% revenue growth going, then yeah, increase 48% over the last 5 years. That's only 9-10% a year. Who cares? Cash flow, revenue growth, net income growth, cash flow growth. That's awesome. So they're driving a lot to the bottom line. But 97 times earnings, 130 times free cash flow, both over the last 5 years. Guys, that's just expensive. Every investment is the present value of all future cash flow. AMD is getting more and more profitable as time goes on. Eventually, it will fall into my buy category. But as of the last time I checked, which was a while ago, it is not there. I think it was last week. You might sit there and say, last week was a while ago. Look at these earnings, 70% increase in revenue. 70% increase in revenue. How's the stock doing now? Now it's down 6%. Okay, so these things change every second after hours. What your job is to sit there and take away 70% revenue growth and say, listen, that's awesome. But they're not going to go 70% forever. And I can still overpay with growing free cash flow and growing profit. If I overpay for it, it's just as bad. It's a bad investment. And that's it. Let's look at the chart of AMD. We go to our software metrics page. Look at this max chart of AMD. They were the boom company, 2000, just like Intel. Then they plummeted. I think they got to $1.60 or something at some point, and now they're at $99. But they hit a peak of $165 and a low of 73. Again, I'd sit there and say, if this is the better chip, why isn't their chart going like this? Because you can overpay for assumptions on the future. Is this the same thing as here? I don't know. It could very well not be. This could be just a small blip in a path to a much higher valuation. But what we're going to do here is we're going to use our stock analyzer tool to determine a price to pay for AMD based on our projections for the future. So if you're new to this channel, stick around for this because this is very important. We created the software in order to analyze companies. Instead of just saying, oh, wow, this company has a great product and they're growing, I will buy the stock. We split the stock up from the company. And we realize that when we're buying a stock, we're buying a piece of a business, but we look at the business fundamentals that will drive the stock price over long periods of time. And it's extremely possible, in fact, it's very likely that people will overpay for growth. This story compounds on itself until finally there's capitulation and people don't want it anymore. Same on the downside. Eventually, a stable company that has bad news with it, but still has some profit will eventually bottom out because the people will be done selling. There'll be nobody else left to sell. They'll buy back shares and drive up that EPS. So let's see how it's doing. Oh, it's rebounded a little bit. Look at this. Now it's only down 4.8%. So let's do some quick look at the income statement. I mean, guys, look at this revenue growth. This is the last 10 years, but look how stagnant it was for a while and it fell quite a bit. Probably wasn't good a story over here, was it? And in 2016, where was the stock? Let's see where the stock was in 2016 when the story was bad. $2 a share. $3 a share, $4 a share. Holy cow. Now look at it. $18 billion in revenue. Guys, this is an impressive company. They make a great chip. Intel has its hands full competing with AMD. But they've won it before and they have the resources to go fight again. Again, I'm not promoting Intel saying you must go buy Intel. But don't go buy AMD just because they have a better chip and they're growing faster. The number one mistake made by people out there is they hear a story and attach themselves to the story and overpay because of that story. I can make everything seem like a great story. Everything. But just keep in mind this. Microsoft in 2012 was trading for $20 or so a share. And I was told I was stupid for buying it because the company was dead. Now you ask people about Microsoft, it's one of the best companies out there. But Paul, it's dead, it's dead. Okay, sounds good. And guess what? I've since sold Microsoft because it was, in my opinion, too expensive. So let's go to our stock analyzer tool. Let's start inputting some growth numbers. So let's see if they're projecting anything for the future. Gross margin was lower. Okay. Quarterly financial summary, prior period results confirmed, blah, 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 blah. Wow. Data center segment revenue was up $1.5 billion, up 83% year over year. These are great. That is great. Okay, let's do some analysis here. Revenue growth. All right. Let's say that over 10 years, they become bigger than Intel. So 5 to the 0.1 power. That's 17.5% revenue growth. I'm going to put that at the high side. I'm going to put 12.5 on the middle and 7.5%. Actually, 10 and 5 here. So guys, this would make them a bigger company than Intel by a lot. Okay, it would make it almost a $100 billion company in terms of revenue. So that's a pretty good number there. Profit margin. I'm going to make it closer to Intel. I'm going to call it 15, 18, 21. Free cash flow, I'm going to do the exact same thing. PE, 14, 16, 18. Guys, and the price of free cash flow. Just remember that we're looking at a PE at the very end of this major growth. And when they've grown a lot, how much harder is it to grow at even higher levels? Look at Intel. Look at all these look at Apple. Apple only grew its revenue 1 or 2%. The bigger and bigger you get, the harder it is to grow. And the harder it is to grow, you have to put in more reasonable PEs. I would usually put 13, 15, 17 here, but I'm going to humor it and say 14, 16, 18. And for my desired return, I would usually do 15% here, but I'm going to do 12.5. The reason I want 15 though is AMD is still smaller than Intel by a lot. They still have a lot of market share to gain. And at the end of the day, Intel can do a lot of things to F with AMD. And they're still growing. I believe I saw a chart where they're still growing their market share in desktop, Intel is, which isn't a big market. We're going to go smaller and smaller and smaller. And AMD makes a great chip, but it's just something to consider here. Let's hit the Analyze button. Now remember, whatever pops up here, if it's all green, doesn't mean you go out and buy it. It means go do your research and make sure this is good. How do you do your research? Google it, join our community, have conversations with people about AMD and what you think of them. If all these numbers are red, but they're close to this, oh, now look, AMD is only down 4%. If it's close to this $95, then still do your research and be ready, add it to your watch list and be ready to jump on this. Now, when you're done with this video, after we do the stock analyzer, hit the analyze button. If you want to repeat the stock analyzer to understand it better, please do. With AMD, it's been a little bit harder because their growth has been big time in the last 5 years and slower early on. So just remember it. So the analyze button clicked right here. Boom. All right. If you believe my highest assumptions, $114 a share. Lowest ones, $28 a share. Middle, around $52 a share. So from here, add it to your watch list, do whatever you want, but remember these growth numbers when you're looking at the stock. If you like this video, please continue watching and subscribe to the channel. I appreciate your time.